This is our Forex blog for May 28th, 2013. And like we do most days, we like to show our currency indexes. This is one of the easiest ways of trading because it lets you see visually what every currency is doing. The dollar, is it going up or down? Is it above its previous day's high in dotted green? The Swiss, is it underneath its previous day's low? What's the price most traded during the previous week in orange? Major resistance. What's the previous day's most actively traded price amongst all pound pairs right here in yellow? Obviously hourly moving average in gray and 15-minute in green. All these things can be used as filters to basically let you know which currencies are the strongest to buy, which ones are the weakest to sell. Obviously the Australian's pretty much trending straight up, while the Swiss is going sideways and then down a little bit towards 2. And basically that's how you use this. You want to look for currencies that are potentially breaking out over the previous day's high. That means they're stronger today than they were all day the previous day. The Swiss is breaking down here around 130. A little bit later, the Australian's breaking out. If you bought the Australian Swiss, you're going to not only most of the time have wins, but you're also going to catch many more pips when right than you are going to lose when wrong. And you can see a little bit before 2, here's 2, a little bit around here is when it gave the signal. It went from 93.30 all the way up within a short amount of time to 93.90. That's a nice 60 pip move. And basically you would have bought this breakout right here, and when it goes up and goes sideways, move your stop up. Maybe you got stopped out of this trade right here, you bought the next breakout. Anytime it's above or upper containment band, and when especially the perfect oscillator is over 80, you want to get out of the trade. But if you got in here, out here with 20 pips, bought this breakout, it's going sideways, maybe got out here with another 20 or 30 pips. That's 2 20 pip moves in a very short amount of time. Very easy to see. You also can draw trend lines, fibs, and every other type of tool on the charts. So let's take a look when the Swiss became weak, what some of the other ones were strong. The Euro is kind of chopping around, going sideways. You can see a nice little rectangle pattern. When currencies break out of rectangle patterns, they tend to trend up. In this case, it's finding resistance at the previous day's high. And so if you're in that trade and you see it can't get above the previous day's high, you might want to get out. You might, when it double tops right here at that level and starts to come down, you might want to sell the Euro versus one that's very likely to go up. And that's what's very powerful about this. It gives you predictive nature. You can see the Australian was one of the stronger ones. At this point, the New Zealand just broke its previous day's high. The Euro was having trouble breaking its previous day's high. So if you sold the Euro New Zealand on or after 2 a.m., you're probably going to make money. And it's the predictive nature of this, which is what I absolutely love. Here's 2 o'clock when that one, the Euro is having trouble. You can see on this individual charts underneath it's hourly. If you sold that breakdown right here, it went from 59.60 all the way down to 58.90. 70 pip move. You're never going to catch every pip of a move of this size, but like I said, we make it simple for you to spot some of the highest probability trades. These containment bands tell you when the currency's gone down a little bit too much. Obviously this thing's trending down, so when it comes up here at 5 and hits the upper Bollinger Band, the Swiss does, that's a pretty decent place to sell the Swiss. So let's try to find a currency that's either trending up or likely to go up to buy it against. Now you can see the New Zealand had a pullback. It was trending up all day and it pulled back and hit its lower band. So when the Swiss is at its upper band and it's trending down, and the New Zealand's at its lower band and trending up, what a great place at 5 a.m. to buy the New Zealand Swiss. Let's put the 5 a.m. On the chart here, and you can see this one was trending up, pulled back, coming up to 5 o'clock. This is the last bar before 5 o'clock. It did reverse and go up. Obviously not too much. If you go back and look at the currencies, you'll probably see that the Swiss kind of came down a little bit, and the New Zealand never popped. You know, when it does, when you see the New Zealand explode up and the Swiss explode down, you're going to make a lot of money. When you don't, you know, the sad part of trading is some trades are only going to give you 5 or 10 pips. But at least you had a very high probability place to get in that also worked. And notice that this area right here, the perfect oscillator, is also at an extreme. And then you made a lower low right here with the same extreme. This is also a very high probability place to get in for 2 reasons. One, perfect oscillator is at an extreme, likely reverse. The trend's up. And the other main reason, this is a 2-wave pullback. If you draw your fibs on there, he wants to bet that this is a fib target from this first swing. Look, right there to the pip. So if you watch our video, the 2-wave pullback trend method, you know, which we've been teaching for about 6 years, that's that trade. Anytime the market's gone up a lot, the trend's very strong, typically it'll make a 2-wave pullback and then continue its trend. And you can also, if you're a very aggressive counter trend trader, up here when it's above or upper band, when the perfect oscillator is at an extreme, you might also draw your fibs off this previous little wave right here. You can see it went right to the 1.618. It's at an extreme. If you got into a counter trend trade, a lot of times, probably 60 to 70% of the time, you're going to get a 2-wave pullback. So you can get short up here at 78.70, ride the 2-wave pullback down to the fib target down here, and make 30 pips on a counter trend trade, flip and go long and ride the trend back up. That's, you know, how we trade with, or how I trade with our software. You can also draw your trend lines when you see a strong currency going up, and then it pulls back. Draw your trend line over the high, and when it breaks it, then look to get in to the trade. You can see kind of the same thing here. Oops, didn't mean to draw that one on there. You can see that same thing here with a trend line over the highs. When it breaks that trend line at 630, much better place to get back into the New Zealand. So which one is likely to go down at this time? Now the yen is underneath its previous day's high, and it's just kind of going sideways. It could very easily continue that trend down. The Swiss is kind of going up at this point. If you had a trend line on the Swiss and it breaks the trend line, you know, at or near the same, very close time that the New Zealand does. Right here you can see a little bit after 6, that's happening. Go back to the New Zealand Swiss chart, you can see that that's pretty much the time when it started going back up. But on the same note, when this broke the trend line here, let's take a look at just trading the New Zealand versus the yen, which is, you know, underneath its previous day's low and just kind of going sideways. If one goes sideways and another one, you know, goes up, you're going to probably make 15 to 25 pips. So here's 6 o'clock. You can see on this chart it broke a trend line 2, and it went from about 82.70 up to the whole number. Nice 30 pip move. Obviously this thing went up and started chopping around, but you probably would have made 10 to 15 pips in that move. And 10 or 15 pip moves will add up. You're never going to always catch huge 30 to 100 pip moves. It's just not going to happen most days. Another thing to let you trade with on this is kind of just trading in the bands. When a currency is between either the hourly, the daily, or the weekly point of control, it tends to be very choppy. So it hits the upper band, you sell it. Hits the bottom band, you buy it. You see a nice little double bottom right here, you buy it. You see a double top up here, you sell it. Certainly that's a nice way of trading too, especially if you have a currency, you know, that this one's having trouble getting above the resistance area of the previous day's high, last week's most actively traded price. It's probably not going to bust through there. Probably 70% not likely. So sell it versus whatever's strongest at the time. Obviously you can see the Australian's been trending up. Went sideways here. It looks like it's about to go back up again. The euro is also exploding up right here. So you could buy the euro pound at 6. This will be the last example. Alright. This currency was underneath its hourly all day, so that's the downside here. But you can see came up to the hourly twice, one time earlier. Usually the third or fourth time it hits an area, it busts through and explodes up. This one unfortunately didn't. It really only went up a few pips. But if you got into this trade and kind of went up a little bit, you know, anytime it goes my way, pulls back, starts to go up again, I'm moving my stop to break even real fast. That's not the best example, so we'll show one more. But you can see that you probably wouldn't have lost much on that trade here. 6 o'clock, the pound's going down. You know, some of the stronger ones with the Australian and New Zealand. So let's take a look at those against the pound at 6. Pound Australian, 6 o'clock. Weak pound, strong Australian. Yep, it's just like I was thinking. It's pulled back about 20 pips here over the next hour. And I suspect the pound New Zealand did as well. This one was trending down. You have a nice move up. It's real close to the hourly moving average. Great place to sell because it's such a major resistance area. You can put your stop just super close right here. You can see the perfect oscillator was at an extreme, and this one actually pulled back about 35 pips. So you had one trade where you probably lost 2 to 5 pips, maybe broke even. It only went 3 to 5 pips our way. The other trade probably would have generated 15 to 20 pips, and this one 35 pips. So of the three, the only one that really didn't pan out was a super tiny loss and 2 decent sized wins. And that's really the key to trading. Not all trades are going to work. You take trades, and when they do work, you hang on as long as possible. And for those who like to do counter trend trading, especially when you identify the trend that's in this case down, and you get a pullback when it's above the Bollinger Band of the perfect oscillator, here, 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 here. This one's also at the plus 80 level. Just scalp these things and make 5 to 10 pips every time. When you have identified a currency that's trending down, guess what? Sell it, make money. Sell it, make money. Sell it, make money. Sell it, make money. Very little. Sell it, make very little. Sell it, make money. That's it. Doesn't get that much harder because most of the time the market's chopping around. If you have the trend that's down, the perfect oscillator is a great place to time what I consider to be ideal entries. And yes, I do trade this method frequently. If I only have 30 minutes to trade and I want to catch 5 to 25 pips, I will do this.